Stock Market Review. Trends and key performers this week in finance. The stock market exhibited a mixed performance as investors navigated ongoing economic uncertainties and new industry developments. While the technology sector continued its robust ascent, driven by advancements in artificial intelligence and cloud computing, traditional industries such as manufacturing and energy faced headwinds. Notably, tech giants like Apple and Google saw their shares rise significantly, buoyed by impressive quarterly earnings reports and optimistic forecasts for continued growth and innovation. Meanwhile, the healthcare sector experienced volatility, with biotech firms seeing fluctuating stock prices as regulatory changes and clinical trial outcomes impacted investor sentiment. Additionally, financial services companies displayed resilience, with many banks posting higher than expected earnings due to increased consumer spending and lending activities. In contrast, the energy sector struggled, with declining oil prices putting pressure on major oil companies' stock values. Overall, the stock market's performance reflected a complex landscape of growth opportunities and challenges, encouraging investors to stay vigilant as they adjusted their portfolios in response to evolving economic conditions and the potential for future market shifts. Inflation updates and economic growth insights. Inflation dynamics in the first week of January 2025 revealed a complex economic landscape, as various sectors showed mixed signals. Consumer prices continued to rise, with energy costs leading the surge due to geopolitical tensions affecting oil supplies. Meanwhile, food prices experienced a slight decline, aided by favorable harvests and improved supply chain efficiencies. Central banks across major economies remained on alert, weighing their options to curb inflation without stalling economic growth. Despite inflationary pressures, global economic growth projections for 2025 remained cautiously optimistic. Emerging markets showed robust expansion, driven by technological advancements and infrastructural investments. In developed economies, signs of a resilient labor market provided a buffer against inflation, with wage growth helping to sustain consumer demand. Analysts observed that the dichotomy between inflation rates and growth rates would require astute policy management to avoid economic overheating while fostering sustainable development. Overall, the week painted a nuanced picture of interdependent factors shaping the global economy. Employment data and consumer confidence report analysis. In the week of January 10, 2025, the latest employment data revealed a mixed picture of the labor market. December's figures indicated a slight uptick in job creation, with the economy adding approximately 180,000 jobs, slightly below expectations but still reflecting a resilient labor market. The unemployment rate remained at a stable 3.7%, suggesting an ongoing equilibrium despite global economic uncertainties. However, wage growth continued to be a point of concern, moderating to an annual increase of 3.1%, which could impact consumer spending power in the coming months. Simultaneously, consumer confidence saw a modest decline, with the index dropping by 2 points to 98.3. This dip reflects growing apprehension among consumers regarding inflationary pressures and potential interest rate hikes. These factors combined have led to a more cautious outlook as households navigate the balance between spending and saving, potentially influencing overall economic growth in the first quarter of 2025. Bond market movements. Trends and forecasts. The bond market in early 2025 has been characterized by notable volatility, driven by changes in global economic conditions and expectations around monetary policy. As central banks across major economies signal potential tightening to combat persistent inflation, bond yields have exhibited upward pressure. Investors are closely monitoring policy decisions from the Federal Reserve and the European Central Bank, which have indicated a gradual move away from accommodative measures. This has led to shifts in portfolio allocations, with some opting for shorter maturities to mitigate interest rate risk. The U.S. Treasury yields have experienced upward movement, reflecting market anticipation of higher rates, while corporate bonds face mixed signals as credit risk assessments evolve amid economic uncertainties. Analysts forecast that the ongoing tug-of-war between inflationary pressures and economic growth prospects will continue to influence bond market dynamics. As such, investors remain vigilant, balancing the opportunities for yield with the inherent risks associated with a shifting economic landscape. Overview of global economic indicators influencing local markets. The global economic landscape as of January 10, 2025, presents a complex interplay of indicators influencing local markets. Notable among these is the ongoing shift in monetary policy by major central banks as they respond to persistent inflationary pressures. The Federal Reserve's recent rate hike has had ripple effects, tightening financial conditions and influencing investment flows into emerging markets. The Eurozone is grappling with uneven growth rates across member states, further complicated by energy market volatility due to geopolitical tensions. Meanwhile, China's economic data shows signs of stabilization following an extended period of policy-driven rebalancing, which could bolster regional trade partners. Commodity markets are reacting to fluctuating demand forecasts, with oil prices rebounding as production cuts by key exporting nations take effect. Currency volatility remains a key concern, with the dollar's strength impacting export competitiveness for various economies. Global supply chain disruptions continue to pose challenges, affecting production costs and the availability of goods. These converging factors are creating a dynamic environment for investors and policymakers, demanding agile responses to mitigate potential risks and capitalize on new opportunities.